Good evening, everybody. This is Doc here from OnTheMoneyOptions.com and Coastal Capital Management. As a professional portfolio manager and an options specialist, I have an opportunity to look at very interesting trades every day. Yesterday, there was a trade in Lowe's Corporation that I thought would be interesting to the retail public because you don't see trades like this very often. And once I explain it to you, I think you'll understand the significance of it. We're looking at a chart here of Lowe's Corporation, and this is in three different time frames. The far left chart is Lowe's in the monthly mode. The middle chart is the Lowe's price chart in weekly, and on the far right is the daily. I want to concentrate on the weekly chart here. Now, one of the things that you've noticed is that over a period of time from 2014 to the current time, I've drawn a line here that connects the lows of the stock price. No pun intended there. Now, when you draw a parallel line to that, this first line, by the way, is called a trend line. When you draw a parallel to this line and put it across the tops, this is called a return line. So typically what happens when a stock is trading in a range, it will trade between these two lines over a long period of time. You'll also see that something else interesting about it is a lot of times when the stock price comes across the midpoint of this channel, it'll oftentimes touch the trend line at the bottom. So you can see here it came across, touched the trend line, went back up, came back, touched the trend line again, and then in early 2018 shot right up through the top of the channel. It immediately turned around and came back inside the pattern. We call that a retest, and then came across to the midpoint. Once it crossed the midpoint, you get this expectation that it's going to come back down here and touch the trend line somewhere in the, say, $77.50 range. Now, $77.50 is important to remember that, so I'm going to take you through the trade. Now, an institutional trader did what is called a buy right. A buy right is when you buy the stock and then you sell a covered call that covers the stock that you've purchased. Now, what's interesting about this is that the institutional trader did this on 1 million shares of stock. So they bought 1 million shares of Lowe's stock and then turned around and sold 10,000 covered call contracts. Each contract is for 100 shares, so 10,000 times 100 is 1 million. So what you're looking at here is a very large position. But here's what's unusual about it. The stock was trading at the time at $84.18. And instead of selling a covered call that was above the $84 price, this institutional trader sold a covered call at the $80 price, which is actually below the current price. Now you'd say, why in the world would he do that? This is called an in-the-money buy right. What's really cool about this is that the trader got paid $6.80 a share to sell the July the July 80 call. So let's go back and review. He paid $84.18 for the stock. He got paid $6.80 per share for the July 80 call. So that's money that we've taken in on this trade. So if you take $84.18 and you take away $6.80 per share for the covered call, you'll see that he's got an all-in cost of $77.38. Now, here's what's interesting about that. I'm going to go back and bring up this point. I said something about the $77.50 level. You'll notice that this is crafted so that if it comes down to this $77.50 level, which is where you'd want to buy the stock, he's okay. Or she's okay, whoever it is. So now let's go back and review what this has done. If the stock goes above 80 between now and July, and this stock is called out, then this institutional trader will make $2.62. That's the $77.38 net price in, taken from $80. That's a 3.4% return. It's $2,620,000 on 1 million shares. Not too bad. Now, if the stock goes down from that point, it's evident from this buy right that the institutional trader was probably interested in being in the stock right here at the bottom of this trend channel. So this is a meticulously crafted trade, very interesting, something you probably are not aware of, haven't seen, but it's a great way to get into a stock if you've got the money to buy it and you want to be in it long term. So this is called an in-the-money buy right. Pretty cool trade. Not something I'd suggest you go out and do 10,000 times, but it's a very interesting trade. It's something about, it's learning a little bit about what goes on behind the scenes. Institutional traders just don't buy stock and watch it go. They work these trades every day to try to maximize their returns in the market. So anyway, it's just an interesting trade. I just wanted to share it with you, a little inside look at the world of stock options. So until next time, this is Doc saying, trade carefully and stay hedged.